Welcome, everybody. For those of you who don't know me, my name is Tom Schmidt. I'm one of the founders of Ticker Tape Investments, and super pleased you all made it tonight. We are going to record this, and we'll post it in our YouTube channel so you can go back and rewatch different sections or share it with your friends and so forth, people who can't be here. So I think we have a bunch of investors in the Ticker Tape Network who are planning to watch the recording. So we hope it goes well in that regard. I would say hello to people in the future who are seeing this on another day and time. Let's see, a couple housekeeping matters. First of all, I am going to do a Q&A session at the end. I have a couple of questions that have already been emailed in from investors, and so we'll address those. But in the meantime, if you have questions either generally about investing, taxes, the markets, the current financial situation, how you should be adjusting your portfolio, any questions like that, go ahead and type them. There's a questions function in the GoToWebinar app. You can type them in there, and then I can answer them when we get to the question and answer period at the end. So just go to the little question section, and you can type them in, and then we'll be good to go, and we can address them at the end of the deal. Before I change the slide, there is a QR code there on the screen if you're using like a computer, and you can snap a picture of that with your phone. That takes you to the contact page for Ticker Tape Investments, and that will show you the links to all of our social media so you can follow us and get all of that information. With that, I'm going to go ahead and turn the camera off so that you can see the full slide and there's no issue. And without further ado, typical standard disclaimer. We're not offering to sell any securities, and we are not providing legal, tax, or other professional advice, certainly not investment advice. All we're doing is sharing some ideas with co-investors at Ticker Tape Investments. You should definitely, if you like some of the things we talk about from a tax standpoint, go to your CPA and ask them about legal issues, estate planning, all that stuff we're going to talk about. You need to get actual professional advice. For some of the stuff, we're happy to help you. Obviously, I'm a lawyer. I've been practicing for almost 30 years. Have a pretty good understanding of tax and legal issues, but I can't give you advice without knowing about your specific situation. So if you have specific questions related to your portfolio, your business, your tax situation, reach out to us and we can either help you or find somebody who can. I see Jesse just joined us. I'll do a quick overview on what Ticker Tape is. Hopefully you guys know by now. You can certainly check us out at Ticker Tape Investments. We are a loose affiliation of individual investors that look for deals together, evaluate deals together, and invest together. It's not really an entity. It is a series of LLCs or other corporations that invest in all sorts of different asset classes, and we also create this camaraderie, this community for educational purposes. So that's why we're here tonight, is helping members of the Ticker Tape community take advantage of some tax strategies and other things that we've discovered in our wanderings, and so we'll talk about those in a little bit. Ticker Tape is 2 startup funds and then a lot of single purpose entities. We invest in a lot of pre-IPO deals. Some of the logos on the screen there you may recognize: SoFi, Palantir, and Outbrain, which is not in there, are all pre-IPO deals we invested in that have liquidated. We're still holding things like ThoughtSpot, Indigo Agriculture, Ripple, Kraken, SpaceX, etc. USA Rare Earth is in the process of going public. I actually did a post today. You may have seen about the USA Rare Earth SPAC deal and kind of explaining how SPAC deals work. So if you're interested in that, check out that post. We currently have 5 SPEs open. That 5th one is kind of half open. It's not technically in place yet, but we are looking to make an investment in Mexico. TTI Utility Rescue is sort of the hottest and the newest, and the one that we're most excited about. It's a pre-IPO deal projecting a 900% return for investors. Some safer things: TTI Debt, TTI Multifamily, and of course TTI Metaverse is a way to get into early stage crypto, blockchain, and metaverse investments. Enough about ticker tape. We're happy to talk about that more in the future if you're interested. The founders of Ticker Tape Investments are, from an executive standpoint, are Tom and Rita. We have a group of what I call founding investors, sort of the initial guys that came together to implement this concept of investing together, bringing deals to the table, helping evaluate deals, and building a diversified portfolio. My background is, I think I'm past 28 years now practicing law. I have my own law firm, Schmidt Law Firm, which still practices. I represent all sorts of business owners, doctors, lawyers, partners in deals, investors who've lost money in deals, and travel around the country, and in the past outside the United States, representing clients in all sorts of areas. Been a Texas super lawyer, multi-million-dollar advocate, and Eagle Scout. Graduated from Penn and then the University of Texas School of Law. Rita Carpel, my partner, has even more experience than I do in the area of investments. She started out as a youngin on the floor of the Chicago Merc, literally screaming, yelling, holding tickets, doing trades, and all that good stuff, and quickly graduated to sort of putting investors together with deals and helping investors make money. She's raised over $300 million over the years for her clients and partners. Enough about all that. You're here to talk about tips and tricks for high-income Americans. So let's talk about that real quick. I'm saying quick in jest. Tonight we're going to talk about, number one, identifying some high-growth investment opportunities in today's market. It's not so much about telling you, hey, go invest here, but it's to create a thought process in your mind of how should I be looking? And then a year from now, if we don't redo this event, you can already have that mindset of how to think about what do I do in 2026 as opposed to 2025. Second, we'll talk about some alternative investment insights. Third, I'll go through some tax, estate planning, and legacy building tips. I'm very big on this idea of legacy. We'll talk about that, and you'll probably tell from my tone how I feel about that concept of building a legacy. And then last, like I say, we'll answer your questions. If you joined late and didn't hear me say it, type your questions in the little questions feature as I'm going along, and then at the end, I'll step back and answer the questions that you guys put in. So the first topic is, right now, 2025, kind of in the near future, 1 to 2 years out, what's hot? What should I be investing in? And again, I want to start by being cautious and saying, listen, guys, nothing's changed in terms of the key concepts that you'll read about at tickertapeinvestments.com or in our social media. Diversification is critical, right? But as time moves forward, at different times, different things may be hot, different things may be getting cold. You may have missed a certain trend. It may be time to take profits, or there may be sort of new trends taking shape that you should definitely pay attention to. So that's really what we're talking about. We're talking about making minor changes to your overall portfolio year after year to kind of shift it in the direction that it should go in order to take advantage of the then current situations and perhaps changes that are happening. So right now, there are three areas that I would highlight that every single person on this call and every single person watching this video needs to be thinking about these things. I'm not saying you should invest in them, but you should at least think about it. Hey, do I have enough exposure to this area? Do I want exposure to this area? If so, how do I go about getting it? So the number one thing is pre-IPO deals. Now, ever since the sort of concept of pre-IPO came out, I'm a big believer in the vast majority of investors in this country should be taking advantage of pre-IPO opportunities. Why? First of all, you don't have enough because it's a new area. It was in the old days, companies went public much earlier in their life cycle. Until things like Facebook and Google came along, where more sophisticated investors were funding the business, saying, listen, I don't want to go public. I want to keep capturing this growth myself. Then when we go public, I'll make my profit, as opposed to sharing the upside and the profit with the masses. And so what this did is this created this new concept that businesses wait longer before they go public, but yet you still have venture capital funds and employees and founders that want liquidity. So that private late, I call it the late stage market, you could also call it the pre-IPO market, opened up in recent years. And man, Ticker Tape, we've pounced on this because number one, I want to invest in all these pre-IPO companies myself. I've done that. We've now exited multiple. I've got an entire portfolio of more than 20 different pre-IPO deals that we've done. And the idea here is, you may have heard me talk about this. I'm not betting on the company's future. Obviously, I want to look at companies that are successful. I want to look at companies that I have some reason to believe they're going to create a positive result or maybe grow, mostly because it's about the average investor having a positive view of that company. So let's take SoFi, for example. You might have heard me say this example. When we decided to purchase shares of SoFi when it was privately held, one of our partners called me up and said, man, Tom, I'm so excited. I love this company. It's going to change fintech forever. Oh my God, it's going to be huge. I said, whoa, whoa, whoa. I said, I'm not going to disagree with you. But remember, that's not why we're investing in SoFi. We are playing the spread between the value of a company when it's privately held versus the value of the company when it goes public. And the idea is that the same company with the same level of sales, the same sort of future picture, will be more valuable once it goes public. So what we do, our strategy is to buy, we try to buy the stocks of these companies as late as we can before they've announced that they're going public. So give you an example, if you know anything about Kraken, we bought Kraken more than a year ago. Right now, I'm looking to buy some more Kraken. Today, to call it March, would be sort of the latest I would want to buy Kraken. I fully expect that in the next 3, 4, 5 months, that company will announce an IPO. We made a mistake, sort of a mistake, and we bought Palantir while it was still private, but after it announced its IPO. Well, what do you think happened there? What happened is we had to pay more for the shares. So when it went public, believe me, I made a nice return on Palantir, but it could have been, I could have gotten probably double my return if I bought it 6 months earlier before they announced a IPO. We were kind of inexperienced at the time. The market was very new at the time. The whole concept was new. We said, hey man, what a low risk proposition here. We can buy these shares now that we know they're going public. Well, that's great, but you paid a higher price. So we're looking to do the opposite end of that spectrum is, you know, the old adage, it's better to be lucky than good. We bought SoFi, and of course we made the decision to do it and signed the contract a little over a month before this, but we literally closed the purchase and funded the shares 3 or 4 days before SoFi announced its IPO. So we were literally in and out of SoFi in 7 months, and I personally made more than 4 times my money, my cash I invested, because we kind of had that perfect timing on SoFi. Now, I sold it in the 20s, it immediately went back down into the 5, 6, 7 range. So had I held on to it, I would have given back all that profit. But again, buy it when it's private, sell it as soon as it goes public. Once it's publicly traded, let it settle down, calm down, let it report for a couple of quarters. Because remember, when they go public, all of a sudden you're getting a lot more information about their financials and the performance of the business. Once that's sort of been digested and you can understand, then you can say, you know what, I want to buy this company for the long term. But you should expect that you're going to get better returns, especially time adjusted, if you buy when it's private and sell when it's public. Now, what types of pre-IPO deals, companies should you be looking for? The 2 hot areas for 2025 are crypto and AI, right? Of course, generally speaking, tech. That's been the case for many years. This year, read the ticker tape article about what's happened in Washington, D.C., both Trump, but not just Trump. To me, way more important is what's happened in Congress and the fact that 300 members of Congress identify as pro-crypto. That is completely different than the situation has been the last 10 years. Therefore, because of that, and because of the changes that the Trump administration has brought to the SEC, we fully anticipate that 2 of our holdings, Ripple and Kraken, will announce IPOs this year. So if you can invest in the stock of a company, remember Ripple is a cryptocurrency, but it's also a company. So we bought shares of Ripple stock, which we are now going to liquidate when they go public. Those types of assets, things like, now obviously Coinbase is already public, but Kraken is a big competitor to Coinbase. So we've invested in a blockchain / crypto exchange looking to leverage upside in that industry. The other one is AI deals. Now, I don't know if y'all saw, I haven't had time to go capture it and put it in a post for Ticker Tape, but I did see a blurb that Mark Cuban was saying a couple days ago that, or maybe it was yesterday, I lose track of time, that the AI companies, don't be careful, don't invest in them because they're not going to go public. Now, that's an interesting concept, which honestly I haven't even thought about or looked at. You know, you've heard these conversations about these AI companies need to be regulated because there are ethical concerns, there are safety concerns, there are national security concerns. Because, for instance, I could build an AI and launch it for a consumer purpose, but then a foreign country could adopt that technology and use it for some military purpose, right? So the expectation, I think, is that regulators of artificial intelligence companies will be too slow to really create an impact. However, if you're an AI company and you go public, all of a sudden you're immediately regulated by the SEC. And so I think part of Cuban's point there, aside from the fact that they don't need to go public because they can raise all the capital they need and they haven't been around long enough, you know, think about it like Palantir is an example where that company, I forget how many years, but it was around for like 15 years before it went public. Well, imagine if you were a venture capital fund that told its investors, we have a 7-year time horizon and you invested 12 years ago. Those guys were chomping at the bit to get liquidity. So that drove Palantir to go public, maybe when it certainly didn't need to. It didn't even do an IPO. It just listed its shares on an exchange. So I think that's a big part of Cuban's point, is they don't need to, because number one, they've only been around a few years, so nobody has, you know, fatigue. There's not a bunch of employees trying to sell or VCs trying to sell, and there's plenty of capital there for them to raise, to get what they need to operate. We'll definitely talk more about these in the social media posts. Make sure you go to tickertapeinvestments.com. You can click on the Contact Us link, and there is a contact form if you want to reach out, but above it are all the links to like our Facebook, our LinkedIn group, our LinkedIn page, all that good stuff. And then of course, check out the blog. There's lots of great content on there about all sorts of topics, not the least of which are AI and crypto. If you haven't seen it, we actually wrote a long article recently about how to find artificial intelligence investments, which you can see on this slide. I've separated out as its own category. The reason is because there's a lot of buzz right now. Forget about pre-IPO deals, very late stage deals like maybe an Anthropic. A lot of excitement is going on right now. Find early stage artificial intelligence businesses and get your money in now before they go up, you know, 10,000% or whatever. Again, this is not really Ticker Tape's bailiwick. We try to reduce taking that risk because, not because it's bad. We've of course invested in tons of early stage deals over the years, many of them very successfully. Really the reason is because of everything else going on in the markets, we sort of feel like we don't need to take startup risk. We can get very nice returns in the pre-IPO space. For example, the utility rescue deal projecting a 900% return in a couple of years for investors who can play the pre-IPO deal there. If that's the case, you don't need it 20 times if you can get a couple 9 times without losing on any of them, because they're already established businesses that are on the verge of going public. So on a risk adjusted basis, we haven't needed to go find lots of early stage investments. But when you talk about where are people investing, what's hot in 2025, it would be a mistake for me not to mention early stage AI type plays as someplace you should look. And again, I point y'all to the article we posted that talks about how to go find those deals, places to go, how to find them, et cetera. I think there's a blurb about it on our LinkedIn page, and then the long article is on the Ticker Tape Investments website. By the way, if you ever try to type it in, there's a short version, which is ttifund.com, also gets you into our website, and then you can go from there and see all the content that is posted there. Last, digital assets and blockchain. Same sort of story on as I talked about with pre-IPO deals. If you can find and determine that there are pre-IPO crypto industry, blockchain industry deals that are credible and have a good risk reward profile, great. Separately from the pre-IPO category, you can invest directly into cryptocurrencies, whether it be Bitcoin or like Ticker Tape does, early stage cryptocurrencies to get that increase in return. But another area, I always love the story. I can't remember his name, but the one of the early CEOs of Cisco Systems, I saw him give a speech way back, I think it was in the 90s or something, and he said, in the 1840s, the United States had this big gold rush out to California, and that gold rush really defined the economy in that 4 or 5 year period. Everybody was excited about gold, and everybody who was hungry went and, went out and staked their claim and started painting in the rivers and digging in the dirt. And if you look at all the businesses that sprang up during that time, I think his point was only 2 companies still existed today. Neither one of them is in the gold business. One of them is Wells Fargo, which provided the communication with the Pony Express and then also the banking where they could put their money. And the other was Levi Strauss, which sold overalls to the miners as they showed up in California. And so it's that what they call the picks and shovels idea, that if there is a tulip bubble and everybody and their dog is overpaying to buy tulips, go invest in fertilizer, or go invest in spades to dig up the earth, or go invest in land to allow people to grow tulips. Don't buy the tulips themselves. If the hot area is fiber optic networks, instead of investing in the bandwidth and the services side, invest in the hardware like a Cisco Systems. Here, companies like Kraken, companies like NVIDIA that build the chips that operate in the computers, that do the mining, things like that tend to be more attractive to me than just pure speculation on cryptocurrencies. But we do have the TTI Metaverse Fund that we specifically created. Frankly, it's one of the only times we actually created an investment vehicle at the request of our partners and investors who said, Tom, you know how to find, you have contacts and people that can help us find good early stage cryptocurrencies and figure out which ones to invest in and which ones to skip. And metaverse real estate, man, we don't know how to do that. I don't want to have to go do that on my own. So we created TTI Metaverse Holdings LLC, which owns real estate, digital real estate in the metaverse. It owns cryptocurrencies, it owns NFTs, and we've been trying to invest in a blockchain software company, haven't gotten there yet. But Ticker Tape and TTI Metaverse, we're not buying Bitcoin. I own some Bitcoin on my own, but for Ticker Tape, we're not buying things like Ethereum and Bitcoin that you guys have already heard of, because we figure you guys can figure that out on your own. You could invest in an ETF or a mutual fund that owns it or something like that. We're looking for the earlier stage assets. I will say this, very rare that I'll kind of give you guys a rule, but every single one of you guys, if you don't own any crypto, you should own some crypto. It is very important in today's world that you own some. Let's see, I'm gonna probably break a rule, but let's see if I can turn my camera back on. There we go. And if I were to put that up there, I don't know if y'all can see, this is just my cell phone. And right there in that middle row, you can see the P, that's my PayPal app. See if I get closer, I don't know if it'll focus, it's awfully close. You got PayPal, Venmo, Coinbase, Robinhood, and then above Robinhood is SoFi. So I have 5 apps right there on my phone, all in one place. And in each one of those apps, I own some sort of crypto. You can buy it on Robinhood. You can buy it on SoFi, in SoFi. I think SoFi may be selling, as a matter of fact, now that I think about it. But then I've got Coinbase. I've got some in there. I've got some in Venmo. So literally, if you Venmo me $500 because we're going on a trip and I pay for the hotel or something, I can take that 500 in my Venmo account and buy crypto with it. Or I can, of course, transfer it to my checking account. And I don't have a large portion of my portfolio in each of these, but it made sense to me that I should be familiar with the apps, that I should know how they work, that I should be able to access cryptocurrencies from different places, different points. If you said to me, Tom, I need you to PayPal me, I should have a PayPal account with some money in it so that I can pay you that way. If you tell me, hey, on Robinhood, this is going on, I want to be able to go over and see the Robinhood app. I encourage all you guys to do that. You don't necessarily have to do all 5, or of course there's more you can also do. But I would have at least a couple apps. I'd put, some of your money in these asset classes. If you don't know why, ping us. I'll go through it for you. But you can go through some of the content that Ticker Tape has posted on the topic of diversification, and that's really the answer. In the old days, my dad, if he were talking to you 40 years ago, would have said, yeah, you need to have some gold and silver as a hedge against other fluctuations in the markets. You still need that, but now we've added this additional asset class. And I got to tell you, if it weren't true 12 months ago, which I thought it was true, it is even more true today in January of 2025 with this new presidential administration in place. I don't know if y'all have heard all these things, but I hear these blurbs on television or on the internet, and nobody makes a big deal out of it. One of the things Donald Trump said before he got elected is, oh my gosh, the U.S. government, the law enforcement agencies of the United States seize assets. We've all heard this, right? They seize boats, they seize cars from drug dealers, all this stuff. Well, in these cryptocurrency fraud cases, they're seizing all the crypto. And historically, over the last, call it 10 years, I don't know how long, the United States government, when they get Bitcoin, they just sell it. And Trump goes, whoa, 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 we're going to stop that immediately. We're going to hold that crypto, whether it be Bitcoin or Ethereum or Ripple or whatever it is, and that'll become an asset of the United States. And if that goes up in value, all the better, much like the Strategic Petroleum Reserve, right? Brilliant, first of all. Of course, they should have been doing that all along, but guess what that's going to do to the price of Bitcoin? You just removed a major seller from the market. Ergo, now that Trump's in office, Bitcoin's at 105,000 and go. I think that's enough on that topic. Again, happy to talk more about this stuff offline by email and a one-on-one call. And of course, we'll continue to post new content, but there's a lot of content already in our social media posts and on our website that talks about all of these topics. This is another one, and I know many of you have heard me talk about this already because it's a big thing to me, and it's kind of been the premise of my investing for the past 12 years, and that is that private equity outperforms the stock market. This has basically always been true. And the primary reason is not the stuff that's on this page, although those are all relevant. The primary reason is that by the time the company goes public, the money's already been made. In other words, most companies, the vast majority of companies that go public, especially today, tend to already have become successful. So if you think about it, where in the life cycle of a company is the real increase in value going to come? It's going to come at between the last minute when it was a high risk early stage proposition and the first moment when it kind of has made it, right? And you almost never capture that window after they go public. It almost always happens when they're privately held. Now, you want to capture all of it, you got to invest early stage, and you got to take a lot more risk, and you got to have a lot more deals fail to wipe out some of your value. We have a different approach. We invest late stage, pre-IPO. When they go public, what do? Sell. And the idea is to capture that spread between when it's private and when it's public. Having said that, if you go to Fidelity or Schwab or Merrill Lynch or some other, well, just say a financial advisor, chances are those guys are going to say, stay in the public markets. You need to diversify. Well, what does that mean, Mr. Financial Advisor? Well, that means you need large cap funds, small cap funds, and mid cap funds. And you need some growth funds and some value funds. And you need some emerging markets and maybe a gold and silver investment or a real estate investment trust. Let me tell you something, guys, that is not being diversified. Let me repeat, that is not being diversified. That's having a handful of the same assets. There's not statistically in terms of standard deviation, there is not a big difference between value and growth stocks, large cap and small cap stocks over time. Yes, if you're only going to invest in the stock market, then please have that kind of diversification at a minimum. But you got to have private equity investments as well. You should have real straight up real estate, not REITs. You should have privately held multifamily, commercial, hotels. We have healthcare deals, emergency rooms. We invested in surgery centers. We've done litigation funding. We're talking to a group right now, and it looks like we may finally get to invest in a merchant cash advance business. All these things are different. They have different correlations, different from each other and different from the stock market. I don't know if y'all saw, or I assume, at least half of the people watching this probably own NVIDIA stock. Nothing wrong with that. I own options. I don't think I own any shares right now, but I own some options for NVIDIA. And all of us took a big beating the other day when it lost, what did it say, $600 billion from its market cap, which somebody told me, I don't know if this is true, that is greater than the entire stock market of Mexico was lost just in NVIDIA value when the stock tanked. Guess what happened that day to my private equity portfolio? Nothing. Nothing happened because it doesn't have that same volatility. Again, pop questions in the Q&A section of the GoToWebinar app if you want to ask more about this. There's content in the Ticker Tape social media pages and our website that talks about how important it is to understand that private equity outperforms the stock market. You should not be limiting your portfolio to the stock market. I even heard, who was it? Some famous investor today was saying on CNBC, only 12%, is that guy Josh on CNBC that I like so much, only 12% of the companies are publicly traded. So if you're only investing in publicly traded companies, you are eliminating 88% of the businesses that you should be investing in. Not okay, right? So a big part of what Ticker Tape teaches people is, hey guys, let's get you into private equity. We'll help you figure out how to do it. You're welcome, of course, to invest with us. We hope you do some of that, but we also hope you invest without us in other deals you find and vet on your own or with your friends or your partners, etc. Let's talk about crypto and digital assets and why right now is such a critical time. I mentioned this already. I kind of spoiled the news. Read the article we posted about the Pro-Crypto Congress. This is crazy to me. I read some articles about this, did some research. There are supposedly over 300 members of the US Congress now, including the Senate, that are pro-crypto. What does that mean? That means that all of a sudden, for the last multiple years, we've had a difficult regulatory environment in the United States for crypto assets, and it just changed. That's even before you even talk about the President of the United States, who is appointing a new SEC chairman, I can almost assure you, entirely because of the old SEC approach to crypto. And so I'm not saying these things are good. In fact, I'm very scared, right? I was one of the short-sighted, not very smart people who in the, I guess it would have been the late 90s into the early 2000s, I was waving flags and cheering that we changed our regulatory framework to allow investment banking firms to also be banks. And one of the things that troubled me in the 80s and 90s when I was kind of coming of age was that if you looked at a list of the largest banks in the world, the top 10 were in Japan. You had to get to like 11, 12, or 13 before you even got to a US bank. I said, well, that's not right. Well, I was aware at the time it was because the banks in the United States, you know, Citibank, for instance, wasn't allowed to combine with an investment bank. Well, I thought, man, this is great. They freed everything up. Well, look what happened in 2007 when the investment banking firms like Bear Stearns and Lehman Brothers started having trouble. The ones that were tied to consumer banks had to be saved by the government, that whole moral hazard thing, right? So when you hear more favorable regulatory environment, the litigator in me hears more fraud claims are coming, right? Because now we're not going to regulate the fraudulent cryptos as well. We're not going to put roadblocks before these things can become available to the masses. You're going to see fallout from that. Maybe not this year, maybe not next year, but from a short-term perspective, there should be some great investing opportunities. Go look through our stuff and find the comments about Nancy Pelosi. If you don't know this, there's a relatively new investing strategy where people are investigating what are the not the members of Congress, but the Congress people or senators who sit on particular committees, and then what are they investing in. So if you have a guy, let's just say he's the chairman of the agriculture committee, and all of a sudden he goes out and starts buying a bunch of John Deere stock, you probably know he's thinking something good's going to happen to John Deere. Well, there's an entire investment strategy around this. Some of them pejoratively call it the Nancy Pelosi strategy. I think I saw somewhere she has like a 275% appreciation track record. Presumably, or so the conspiracy theory goes, because she's cheating, right? She's trading on insider information. But the good news is we have access to what she buys, so we can copy her. I use that as an example because if you have 300 people in Congress who are, quote, pro-crypto, it's probably a good assumption that they all own crypto assets, and they're probably going to vote and write bills and behave in a way that's favorable to those investments. That's all I'm saying. Doesn't mean you'll make money on every deal. It does mean there's probably a little bit of a tailwind there to help us. Number two, big deal. I don't have time to go into it today, but try to learn something about tokenization of real assets. I'm fascinated by this. I saw some guys talking about we're going to take a high-rise building in Tokyo. We're going to divide it up into 100,000 bits. And each one is going to be tied to a blockchain smart contract, so that an individual school teacher in Des Moines, Iowa can buy 1 bit of a high rise in Tokyo and 1 bit of a high rise in London and 1 in Sao Paulo and 1 in Dubai. And they can't afford to invest in that building because they don't have $5 million or whatever the minimum would be, but they can pay $400 for 1 bit that then will be tracked with the value of that business. That building, it may receive revenues, et cetera. Same thing with a $30 million painting. You know, one of my dreams is to own my own Renoir oil painting. Probably never going to happen. A, because I'm unlikely to have enough money, enough disposable money to buy one. But what I keep telling myself is, realistically, if you did have enough money to buy one, you probably wouldn't spend it on a painting. But holy cow, if I saw somebody who was tokenizing a Renoir painting, I'd be one of the first in line to buy it. This is something you can definitely look at. And again, if you're an investor, if you're thinking like an investor, you might look for companies that are tokenizing and invest in those companies. Might be an area that's worth looking at. Certainly, Ticker Tape is looking at deals like this as we speak. Number 3, Bitcoin and Ethereum. Number 1, headline, Tom Schmidt, Ticker Tape. We're not big on Bitcoin or Ethereum right now. We want to sit back and watch a little bit. However, there are a lot of positive catalysts for Bitcoin and Ethereum right now that didn't exist 4 months ago. The big thing being the Trump administration saying the US government is going to continue to hold these assets and maybe even start buying them. Another one is it appears that the technology for mining is going to accelerate, which gets us to I don't know if you know this, but Bitcoin has there are a finite number of Bitcoin, and it's just a matter of time before all the Bitcoin miners out there get to the end and they're all gone. Well, what happens then? Now, all of a sudden, the miners that are currently creating extra supply of Bitcoin and, quote, holding down the price will be gone, and all of a sudden the price should appreciate significantly higher. Long term, I'm a big believer in Bitcoin. Everybody should own some, so if you don't, maybe try to get in around 100,000. But I'm not speculating with it right now. I feel like a lot of that upside is already out for the near term. Last, early stage deals. That actually, is kind of like Ripple, although for us, Ripple was a late stage deal. We invested in a company that was focused on the crypto market and was developing crypto software and tools and these sorts of things. And that's the kind of deal, just like Kraken, again, not a great example because we invested in it very late stage. Just to be clear, if I didn't say it before, I love Kraken. If you can get in quickly before they announce their IPO, you should do so. Keep an eye on Ticker Tape. If and when we get a deal closed to buy more, we'll put it out there. But to me, that's a really good potential strategy if you want to get more exposure to cryptocurrency and digital assets, is look at companies and invest in companies that are going to benefit from the rise of crypto and digital assets. Okay, that's all. I'm really going to focus on investments tonight. This is actually my favorite part of the presentation, and one of the areas where I feel like Ticker Tape can really bring a lot of value to our audience. And the reason is a couple things. Number one, we work with hundreds and hundreds and hundreds of people. We have over 200 investors that actually invest with us, several thousand more who are reading emails, coming to the website, joining calls like this, etc. And then you have the hundreds of clients from my law firm over the last 28 years, I guess, in which we basically represent business owners, professionals like doctors, lawyers, and engineers, and investors and the like. And I've learned all kinds of mistakes that people make. I've confronted tax problems. Hey, how do I get out of this bind? How can I improve my tax situation? And then just kind of generally in our travels, you probably know we host lunches around the country, invest in lots of deals, meet other investors and so forth. And so we've learned some crazy stuff over the years. These are 4 of probably 35 different categories of tip kind of stuff we can bring you. Some of this you may already know. Some of it hopefully is brand spanking new to you. Number 1, and I just had another conversation about this with my daughter today, as a matter of fact, hire anybody in your extended family who's under 18. Grandkids, kids, nephews, nieces, anybody you have who's under 18. you can pay them a salary, and up to a certain limit, I think it's 12,000 or thereabouts, it is tax-free to the person under 18. They don't pay any income tax on the money you pay them. But it is 100% tax deductible to the employer. So if you don't have a business, create an LLC, come up with what it's going to do, and I'll tell you some other things you can do with it in a second, and have that LLC hire, if you have 5 kids under 18, God bless you, hire all 5 of them immediately and pay them whatever the current 2025 cap is, so that they don't pay any income tax. Now, the part I was talking to my daughter about was, I made the comment that, so you can hire your kid, let's say he's 16, and you pay him, let's just say 10,000 a year. The number one reason to do that, and the reason I would be doing that, is that year after year, my daughter will have cash building up that will be hers. And it's a way, from a sort of a estate planning standpoint, I can pass my wealth to her in a tax-free way in terms of her side, and I get a tax deduction for doing it. So it just kind of makes sense. But I don't have to do it that way, right? There's a standalone piece of this, which is save the taxes, right? I'm going to pay, let's just say $3,000. Is that right? No, $4,000 of the next 12 grand that I earn paying my income tax. I can save that money by paying that money to my daughter and deducting that expense against my income. There's nothing that says what your child has to do with the money, right? It doesn't have to be a college thing, it doesn't have to be savings. So I pay her a paycheck. The next day, we got a dry cleaning bill. I just take her debit card and pay for the dry cleaning, or I pay the electric bill for the family, or I pay the car payment. In other words, she doesn't have to keep the money for her own purpose. There's not, tons of families historically and currently have the kids go get jobs to help support the family, right? Nothing wrong with that. Heck, charge your daughter rent, right? And all of a sudden you're creating, you've eliminated taxes and you haven't done anything else. Now, obviously for me, if you have enough disposable income that as the parent or the grandparent or the uncle, you don't need that cash for yourself, then by all means, use it as a wealth transfer, an estate planning tool. Ask us if you have any questions about that. Number 2, this is a big one. Those of you who are, we have lots of examples in Ticker Tape of investors who are high income professionals. Let's just say a oral surgeon. Dad is an oral surgeon making $1.5 million per year, and he works hard, a lot of hours or whatever, so he doesn't have as much an opportunity to spend that money as other people do. So what does he do? He's investing in real estate, he's investing in oil and gas, he's investing in little businesses, etc. At the end of the year, his real estate investments on his tax return show a loss because they're depreciating assets, or an oil and gas deal, they're using accelerated depreciation. We did a bus company once upon a time, and we'd go buy brand new buses for $250,000 and deduct 100% of it off the P&L of the company in that current year, and then take the tax deduction. But the problem is, if he doesn't have passive income to offset those losses, they just accumulate. He doesn't get the value of them. Man, wouldn't that doctor love to be able to to deduct his real estate losses against his doctor income? How do you do that? If the doctor has a stay-at-home wife who is taking care of the family, send her to an online real estate course and have her start going and inspecting the properties and make her active profession real estate or oil and gas or transportation if you've invested in a bus company. In order to deduct passive losses against active income, all you have to do is be able to demonstrate that you have an active role in that industry, job, investment, business, whatever it is. And so if it's as simple as I'm going to start showing up at the management meetings for the multifamily property that I invested in, your CPA can tell you, or you can even Google, how do I become an active participant in the business that I have invested in? And all of a sudden you can deduct those passive losses against your active income, which makes a huge difference on your tax return. Self-directed IRAs, I hate to pick on you guys, but a few weeks ago, we did an event in New York and had a bunch of people in the room, over 30, I think it was almost 40 people in the room. I said, raise your hand if you currently have a self-directed IRA, and a tiny fraction of the people in the room did. I thought, oh my gosh. Okay, so here's the deal. If you have an IRA, Roth or otherwise, not talking about a 401k or something else, but if you have an IRA, and you should, then you should, if you haven't already, you should convert it into a self-directed IRA and start being, you can still invest in the same stuff you're investing in now, but now you can invest in private equity deals inside your IRA. Also, experts would tell you that, of course, you got to look at your own personal situation, but chances are you should be converting everything to a Roth. Look up, if you haven't heard the story, look up the story of Peter Thiel. He's, by the way, the founder of Palantir and also, I think, the first investor in Facebook. He woke up with $4 billion in his Roth IRA. How did he do that? It went from buying stock in the stock market, right? It was buying early stage investments that appreciated in value. I'm not saying that should be your goal, but that guy has generations that don't have to pay tax on that appreciation. That's an enormous, enormous benefit. I'd love to have, heck, $10 million in a Roth that I can then withdraw in retirement and not pay tax. That's enormous. Or on the appreciation, I should say. If you have questions, by the way, Rita's an expert at transitioning to self-directed IRAs. If you have an old 401k, and by the way, I'm guilty of this. I have a small 401k account for a former employer that from a couple years ago that I still have not converted to an IRA. It needs to be converted into my self-directed IRA. So that's on my to-do list. But Rita can help you with that, introduce you to some very nice people from a couple different companies that'll explain the process to you. It's very cheap. It makes sense for everybody. And it's a great way if you don't have a lot of investable cash outside of your retirement accounts. It's a great way to take advantage of these things in your IRAs. By the way, what's happening here? I should say this. I sometimes forget to talk about this. Think about which account. You have probably multiple types of accounts. You probably have a checking account. You probably have like a trading account at Merrill Lynch. You probably have a 401k account with your employer. You probably have an IRA, which hopefully is or will be a self-directed IRA. Think about if you make a particular investment, where should that investment be placed? For instance, if you are looking to invest in a debt fund or a multifamily property, TTI multifamily 4, so that you can get that cash flow and live on it and spend it, then you probably want to invest in that multifamily deal out of your checking account, right? In your own personal name, not in a special account. If you're looking to invest in a early stage deal where you might get 20 times your money, or maybe even a pre-IPO deal like a utility rescue where you might get 900% on your money, those are great candidates to go in the Roth IRA. If you're investing in something safer, a real estate deal where you might get 8 or 9 or 10 or 15% annual interest or return, yes, you'll still get a benefit if you put that in your Roth, but I would make those investments in a different type of account than you make the sort of high return things. Remember, think about Peter Thiel, right? He didn't get $4 billion in his Roth by investing in multifamily deals in that account. Keep that in mind. Again, pop questions in the questions feature, and we will, or reach out to us afterwards. Happy to talk more about that. Last is tax loss harvesting. We used to do this with that bus company where there are certain companies and certain investments you can make where the other investors have already written off all of their investment. So handing them an additional loss for the year doesn't create any immediate value to them. And so the company will give you a disproportionate share of the loss, which if you have a big passive income gain, maybe you sold a stock or something like that, or a deal got bought back, there are certain types of investments you can make. Oil and gas is kind of the #1 sort of go-to category, but you can also find operating businesses that have accumulated losses and this sort of thing that can create value for you. Now we're finally getting to one of my favorite parts of the presentation, and that is about legacy. I went to an event. There were about 300 or 400 people in the room. And the guy got up to the front of the stage and he goes, all right, raise your hand if you can name all 8 of your great-grandparents' first name and last name. And it was crazy. There was only like 10 people in the room that raised their hand. Now, I happen to be one of them. And they said, okay, keep your hand up if you can name first name and last name of at least one of your great-great-grandparents, which I could. But then he said, keep your hand up if you can name 2. And not only did I put my hand down, but nobody had their hand up. And he made this big point. He goes, in America, we've lost the concept of legacy. And that picture that's on the screen is there for a reason. I'll bet you that very few of the people on this call have a portrait of one of their ancestors above their fireplace. You know who does? People from like the Vanderbilt family, the Rockefeller family, the Rothschild family. Why? Because that great-great-grandfather or great-great-great-great-grandfather left them a legacy, left them trusts, left them assets. The other really cool thing I heard, and I may have this off, but you'll get my point. I believe it is the Vanderbilt family that had a family reunion and something like 100 and something Vanderbilt family members came. And you might be surprised to learn that none of those people were millionaires. Crazy. On the other hand, if you look at the descendants of the Rothschild family, all of them are multimillionaires. And the person doing this presentation said, what's the difference? And the answer is how they built their legacy, how they trained their children and grandchildren to deal with money, and how their trusts and foundations were structured. In one family, a kid has a trust fund, he can go buy a Ferrari, and the trust will pay for the Ferrari, he has it free and clear, and he can crash it into a fence. In the other family, he can still get the Ferrari, but he has to borrow the money from the trust and wait for it, pay it back. If he doesn't have a way to earn money, either from investments or businesses or work, he can't have the Ferrari. What does that do? That ensures that when that child grows up and dies or whatever, passes it on to the next generation, the value of the asset is the same or greater than it was when that kid came along. And that is how you build a legacy. Now, you're not going to be able to accomplish that in a day, but everyone on this call should be thinking about this. Number one, you need to set up a trust. You need to come pay attention to the ticker tape trainings about what kind of trust do you set up and what does it say, because this not only will help create your legacy, but the real reason to do it today, the #1 reason, is to reduce your tax bill. If you're paying any income tax, either by withholding or by writing a check come April 15th or afterwards, call us and let's get through this and stop that, because people who have the kinds of income that ticker tape investors have should be using this strategy. I'm not saying you can always pay 0 tax, because stuff happens. You have a big gain or something. We signed a big new oil and gas lease, so I got to figure out how am I going to, shelter all that income that came unexpectedly. Things happen, but generally speaking, you can define income as deposits into your checking account, into the trust's checking account, and you can define expenses as money spent out of that account. And your tax return now has two lines. Here's the total of what was deposited in line 1. That's my income. Here's the total that was spent. That is our expenses. And if the net is positive, you donate 100% of that net to your charitable foundation. And the line that says taxes owed is 0. Very relatively simple strategy, 100% legal. Is it right for every single person? Certainly not. But it does make sense for most high income individuals to take advantage of. Talk to us if you have questions. Happy to help you set it up for you. There's a third thing that, again, I have to kind of keep hitting myself and reminding myself to mention this, is asset protection as well. When you put your assets in a trust, if something goes wrong, you have a car accident and someone sues you, you're a lawyer or a doctor, you get sued for malpractice and something goes wrong, something else goes wrong in your business. My grandfather started the Schmidt Barge Yard here in Houston, was very wealthy from selling building and selling barges up to and during World War II. And then a barge exploded and a worker was killed and he lost the entire barge yard, right? Had he put everything into a trust, perhaps some of those assets would have been saved. That is a side effect of that trust and foundation strategy. And then if the assets grow to a certain stage, you want to start talking about creating a family office. Okay, quick summary, and then we'll go to Q&A. I know we're running a little over time today. Number one, think in terms of what's going on today in 2025, in 2026, in 2027 when we get there, in 2028. Be aware of emerging sectors, things that are dying off, things that are on the horizon, et cetera, et cetera. Protect wealth. Utilize tax optimization, estate planning, asset protection techniques. We can help you with all kinds of ideas for all the above. We can refer you to people who can help put it in place for you if you need that. But think in terms of protecting your wealth. Future-proof. Diversify across different asset classes, not just stocks. You got to have stocks, you got to have bonds, all those things your financial advisor tells you, but he can't earn a fee on a lot of these private equity investments. He can't earn a fee on your crypto investments. So he has a built-in incentive not to have you take money out of your trading, your Fidelity account that he's earning a management fee on, and put it into a pre-IPO deal or a real estate deal or a crypto deal. And so remember who the messenger is and what their motivation might be. Build a legacy. Explore strategies for intergenerational wealth transfer. I guess this is a word from our sponsor. 4 open deals at Ticker Tape right now. The one we're really pushing and recommending and putting more of our own money in is Utility Rescue Holdings, looking at a 900% return in a couple years because of the pre-IPO nature of that deal. Those of you who've already kind of looked at it, we are closing the current round, which is valued at $2, and raising the share price to $2.50. So if you want to get in, now is kind of the time. You get a, what is that, a built-in 25% increase because of the this new restaurant deal that has been dropped in our lap. TTI Debt Holdings, much safer, but your only upside is 12% on your money per year. TTI Fourth Multifamily, a little better return, still less risky because it's backed by real estate. And then Metaverse Holdings, very, very risky, but it does have the sort of portfolio benefit, the diversification into crypto, metaverse, blockchain software, NFTs, et cetera. Some of them may fail, but the ones that succeed should make up for them. All right, Q&A, finally. Let's see. Yes, Hirsch pointed out that Masterworks is a company that buys and securitizes paintings. We've looked at that, but it's been a while. I should probably go check it out again. Those of you who are interested in that whole idea of tokenization, taking an asset, be it a building or an audio recording like a song or a movie or a painting or something like that, a real world physical asset, and digitizing it and marketing it individually in bits to an investor Masterworks is certainly one of them that you would want to look at. The second one, this is a great question. It's a little too much for this call, Omar, but Omar is asking, what would be the purpose of what would the purpose of creating an LLC be to hire my kids if there's no business owned by the household? Well, the first thing is you should own a business. There's a million reasons. Omar, put in the questions what you do for a living if you don't mind. But there's a million reasons. First of all, having a business gives you all kinds of tax deductions for your family expenses. All of a sudden, if it isn't already, your cell phone bill is 100% tax deductible if it's used in your business. Your TV, my TV, whatever I have, a direct TV account is 100% tax deductible, because while I'm sitting at my desk working all day, whether I'm at my physical office or my home office, my television is on CNBC all day long. In fact, I look over there, it looks like Shark Tank is on right now. I'm not watching it because I'm doing this, but all day long I had the markets going. And so all of a sudden that's a tax deductible expense. Home office deduction. I mean, there's a million things, lots of utility stuff. So that's the first thing. The real question you're asking me is, what should that business be? And the answer is, it does not matter. It could be your son's lawn care business where he mows yards. It could be an online marketing business, and it's what do you call it? A hub for your hobby. Sometimes y'all ask me the story about, there's a guy named Lou Pye. Lou was one of the big guys at Enron, and he is arguably one of the luckiest people that ever lived. He was a big stockholder of Enron stock, and he was also a huge fan of strip clubs. And he basically spent every workday in a strip club, and he literally was working. He had people come and had meetings, and he entertained them and all that stuff. But not surprisingly, he ended up having an affair with an exotic dancer, and his wife caught him. And so she filed for divorce, and he got divorced right before the fall of Enron. So he's the only guy who was able to liquidate all of his Enron stock before the fall. He's now, I think he's the largest single landowner in the state of Colorado, which, if you think about that, it's an impressive statement. But his wife, sorry, not his wife. So he gets divorced. He marries the exotic dancer who I've met. And she gets excited about horses. So they buy a horse farm, start buying horses, and they have a breeding business. Well, when the SEC investigates him for insider trading, and of course they can't find anything because he didn't do insider trading, he just got caught and got divorced. So they looked for other things, and they found that they had this horse breeding business that had never sold a horse. They had been deducting it every year. Well, all of a sudden they had a fire sale. You could go buy horses for pennies on the dollar because they had to show some sales in the business. So I'm not saying do that. You absolutely should not create a business that has no revenues just to take, don't do that. But you can theoretically. So the point being, think about Amazon.com. That business lost money for years and years and years. Nothing wrong with that, right? My ranch has an S Corp called Ticker Tape Farm Inc. In case you didn't know, Ticker Tape Investments is named after my farm, which my father bought because he was in the stock market. And in 1970, when he bought the property, he called it Ticker Tape Farm. He also had a dog named Ticker when I was a kid. Too much trivia, right? Anyway, we have an S Corp called Ticker Tape Farm Inc. It doesn't own any assets. But when we buy a tractor or fix the tractor or pay an expense, the expenses are paid by Ticker Tape Farm Inc. It then has that deduction. If we have the land leased out to a guy who has cattle on it, so when we get a lease payment, it goes to Ticker Tape Farm Inc. And so it doesn't really have a business, but it is engaging in some financial activities. Tell your kid, I told my kid, I said, oh my God, you need to make a flyer. He didn't do this, of course. Now he's an engineering student at UCLA, my son. I told him, I said, oh my gosh, I'll print you up some door hangers, go door to door and tell people you'll come configure their technology. You'll set up their cable TV, their Wi-Fi, what do I have? I have I forget, it's right on the tip of my tongue, the little system that has speakers and you can play your cell phone music to your stereo system. I paid for it. It's sitting down there. It doesn't work because I don't know how to configure it, right? People will pay good money for your teenager to go set that stuff up for them, either because it's less often now that they don't know how to do it, but more often that they don't have time and don't want to mess with it, right? Find something. You're one of you in the family, one of the kids has a hobby, that can become a business. Google, what can my small business be? How can I start a small business? Find one of those. Omar said he is a W-2 physician. Man, give us a call. Let's chat. I can help you save a ton of money on income tax from against the income that you're earning as a physician. You're like the #1 category where you need the most help. I represent hundreds and hundreds of doctors and healthcare businesses, psychiatrists, surgeons, dental physicians, whether they're oral surgeons or orthodontists or traditional family dentists. I have a ton of experience helping guys like that. Happy to spend some time totally free of charge, see what we can do to help you out there. Alyssa says, if I want to invest in oil and gas, what fund, et cetera, do you recommend? If you look at the history of all the lawsuits that I've touched in the last 28 years, the #1 category is people who lost money investing in oil and gas deals. It is very, very tricky. You need to read all of the information in the Ticker Tape Investments universe on due diligence. There's one called 6 Keys to Successful Private Equity Investments. It's not about oil and gas, but those rules hold the day, right? Follow these rules. Make sure that whoever's running the oil and gas deal has a track record of success. He's going to have a couple failures. If he doesn't admit that he had some failures, stay away, right? You want the guy to say, look, we had 2 that went really bad. Here's why. The other 12 were incredibly successful. Here's a list of 10 investors that have invested with us who will give you a glowing recommendation. That's if you can't get that, don't even have another conversation with them, right? Again, ping us. We're happy to talk to you. We have due diligence checklists we can give you for oil and gas deals. The perfect answer to your question for most people on this call is find either partner with Ticker Tape when we're doing an oil and gas deal and join with us, because we're going to do all that due diligence. Chances are you don't have time to do it. Or find someone like a Ticker Tape that you can tag along with, somebody who's a successful investor who understands oil and gas deals, if that's what you're looking at, but due diligence and economics and performance and all these sorts of things. This is why Ticker Tape invests. I didn't talk about this, but if you come to our lunches, we spend a lot of time kind of telling you why it even exists. It is not because we're earning a bunch of fees. It's because I need help building a diversified portfolio for myself. Let me say that again. Tom Schmidt, Rita Carpel, we need help building a diversified portfolio for ourselves. We are not qualified as 2 individuals to evaluate an oil and gas deal. Now, I'm more qualified than a lot of people because I'm a lawyer. I've seen a lot. I've invested in a lot. I've litigated with them. I've got a big case right now against NOV, and I get to see under their skirt and all their financials and all those things. And by the way, I know I can tell you how to drill an oil well, how the bit turns, how the mud flows down the pipe inside and then flows back up in the annulus of the well, how to set the surface casing to protect the groundwater, how the different sized casings do different things. How do you drill directionally in a horizontal well? What does fracking mean? I know all that stuff. Does not mean I'm capable of evaluating oil and gas deals. The only reason I'm able to invest in them is I have 200 plus investors who come with me who do have, not all of them, but many of them know how to evaluate an oil and gas deal. And the best thing I've gotten out of Ticker Tape is all the deals I did not invest in because someone told me, oh, Tom, that's not a good one. Does that make sense? So the #1 thing, if you're looking to invest in oil and gas, I would start with track record of the person you're investing in, right? Track record. And by the way, 2 years ago, I would have told you, do not invest in exploration and production deals for oil and gas. Right now, it's kind of, the conclusion is probably that you should because of the Trump administration and Sarah Palin's, she gets credit for the slogan drill baby drill, which Trump has now adopted. That means there's going to be more oil and gas activity. However, guess what happens when more people drill for oil? The price of oil and gas goes down. What happens when more people turn on their Bitcoin mining machines, or more people buy faster Bitcoin mining machines using the newest NVIDIA chip? The price of Bitcoin goes down. What happens when more people invest in server farms or fiber optic lines or tulips or corn? Back when the United States government said, oh my God, we're going to do ethanol, we're going to make ethanol be in all the gas pumps. Guess what happened? Every farmer stopped planting sorghum and wheat and started planting corn to make ethanol. And guess what happened? The corn market collapsed and everything else skyrocketed because there wasn't enough wheat, sorghum, and soy, but there was way too much corn, right? So be aware of that. Again, picks and shovels, right? If you manufacture drilling rigs, my guess is you're going to have a lot more demand in the coming months. If you're drilling oil wells, there's going to be more oil wells looking to be drilled. However, prices may come down, so the money you're making right now may not be the same you make in a couple years. And again, I'm no expert. These are just theories and thoughts we've had that we talk about at Ticker Tape that we're sharing with you guys for free. Next question. What oil and gas are you invested in? Is it a fund or a direct interest? Well, the answer is all the above. So I have a very small percent of my publicly traded portfolio is always in energy. I'm doing air quotes. In fact, I guess I could turn my camera back on. I always keep a piece in energy. I've recently reduced my utility investments because the utility stocks have, I think, skyrocketed out of control. Why? Because of crypto mining and AI server farms creating an expectation of very high energy demand. In that segment, I always have some pipeline investments that tend to be what are called MLPs. Like Kinder Partners, I like, well, ping me and I'll give you the list. And then some, well, I should say in recent years, I moved away from the integrated oil companies like Exxon and Chevron to E&P companies instead. Again, that's a very small percentage of my publicly traded portfolio. Outside of the public markets, I'm only invested in direct investments in limited partnerships that are drilling for oil and gas. And of course, I have real estate land that we own that has been leased for oil and gas exploration. If I didn't have that, I see that as, if you look at my overall asset picture, my trust and everything else, it is way too heavily invested in oil and gas because of the land and the expectation. Well, first of all, just the income from the leases, but sure enough, eventually when they drill again and start producing, I'll have too much of my total portfolio oil and gas. So what I would do is I would have maybe a mutual fund if you don't want to look at individual companies. One of the ETFs maybe that does drilling companies. Is it DIG, I think, is the ETF that my dad used to own a lot, and or E&P companies. And then I would look for direct investment in smaller oil and gas plays, little limited partnerships. Ticker Tape, I'm sure we'll have one this year, so keep an eye out for that. The questions, I'm not going to go through all the questions we got ahead of time because I'll just email these folks back. But one of them that I didn't really think through the fact that we excluded it from the presentation is real estate. And the question that came was, should I invest in multifamily real estate or commercial properties in 2025? And I'm not sure if that person meant, would you prefer multifamily or commercial? Or if he's saying, should I invest in real estate? These are two areas I might invest in. The answer is, I'm a big believer in investing in real estate as part of my overall portfolio. I'm in a bunch of hotels. I'm in a restaurant, I guess, right now, looking to invest in some more restaurants. Emergency rooms that own real estate, multifamily properties, apartment complexes that own real estate. And I'm currently evaluating the Mexico real estate development deal which owns land, I say multifamily, it's actually 16 freestanding duplexes. Brilliant opportunity in a suburb of Chicago, which sounds good, but it's actually in the state of Indiana. So you have a better landlord-tenant law situation, and you have a better tax situation, and it's a red state, which is more favorable to owners of land and businesses. So love that deal. And then another multifamily deal we're looking at in Huntsville, Alabama, that I'm kind of on the verge of passing on. Oh, and then another one is a portfolio of high-end Airbnbs in the St. Louis market. So we're looking at lots of these. I'm not in any way bearish on those investments, on real estate in general or anything like that. I think it's kind of always a good time to continue to add money to real estate investments. However, today I feel like the balance of risk return has shifted because of the new Congress and the new president towards some of these crypto, AI, tech, pre-IPO deals where we could get a bigger return faster without a lot more risk, right? Obviously, any pre-IPO deal, when I invest in SoFi, that would be viewed as more risky, even though it had a multi-billion-dollar valuation, more risky than, say, an apartment complex that's cash flow, right? Especially where there's equity value in the asset, land, and the buildings themselves. So it's higher risk. But if the return is so much greater and the risk is relatively low, it starts to look a little better than a multifamily. However, it's not a choice. I'm not selling everything and getting into pre-IPOs or getting into AI. I'm not, 5 years ago, I'm not selling everything and putting in multifamily. Diversification. I've got Bitcoin. I've got litigation funding investments. I've got a new merchant processing advanced deal we're looking at. I've got real estate of all different kinds, right? Lots of diversification in my real estate portfolio. And by the way, I got a ranch, right? A big ranch is a big asset of my overall portfolio. So I got to keep that in mind. Now I got a lot of real estate in addition to the lawn. So I'm thinking big picture diversification. I've got stocks. I've got bonds. I've got gold. I got coins, physical coins, lots of them, mostly silver, some gold. I sold some gold when it spiked a few months ago, thinking I was really smart. Sure enough, it pulled back. I'm patting myself on the back, and guess what? Now it's right back to where it was. And I'm thinking, crap, I need to go buy some of that back. Bitcoin, crypto, what do you call it? Early stage cryptos, Ethereum, Ripple, Solana, Bitcoin, all the sort of higher end, the bigger cap, let's say, crypto. So again, you want to have that whole diversification. So yes, if you can find a good real estate investment, I'm all in favor in 2025. We're going to make some, by the way. You're welcome to come participate with us. And if I made it clear, one of the really cool things about Ticker Tape is that you can look at the deal and choose not to invest. And when you do that, you get the benefit of seeing how we think, the kinds of due diligence that we do. We can share all that with you, right? And so you may do your own deal and benefit from what you learn from attending one of ours. All right, guys, with that, I'm going to wrap it up. Happy to talk more offline. Great way to reach us is through Rita Carpel. There's her phone number, 832-459-7335. I always recommend you text her because chances are if you try to call, she'll be on another line. You can also email her at rita@ttifund.com. You can also go to tickertapeinvestments.com and go to the Contact Us page, which has all our social media things, and there's a form you can fill out to reach out to us. Thanks, everybody, for attending. Again, hello and goodbye to those of you watching in the future on the recording. We love doing these. We'll post this in our YouTube channel, which you can get to on the tickertapeinvestments.com/contact, I think it is, but just go to ttifund.com and click on the Contact Us page, and you'll find the links. We'll see you all on the next call. Thanks, everybody.